Levi wants to know, is the probability number really that important as it relates to the overnight swing trade? And the overnight swing trade is a high-risk trade with high rewards because we're going after bigger moves overnight, which is a little bit different than the swing trade. One of our goals is to get the emotion, as much of it as we can, out of the trade, yet still be an active, aggressive trader. And there are three parts to the overnight swing trade. The first part is, of course, the time. The time starts at the end of the trading day. We buy at the close, and we usually sell at the open or the first half hour or first couple hours of the trading day, depending on your plan and how you like to approach that overnight trade. The other part is the approach in terms of how we trade and what we trade, the ETFs or options or a 2-to-1 options ratio or 3-to-1. There are many different option ratios to consider depending on how aggressive you want to be. But the core, of course, is that signal, the up or down signal. And at SPY tomorrow, that's really the foundation of SPY tomorrow. The SPY tomorrow signal measures what is referred to, or we refer to as the pressure of the market at the end of the trading day. And that pressure is either up or down, and it has nothing to do necessarily with the trend of the market at the end of the day. The market may be moving up, but our indicator says down for the next trading day. So that's not really what it is. It's a very specific measurement, and then we trade off of that up or down signal. Now here's the thing. On average, the signal's right about 75% of the time. Sometimes it's right a little more often, sometimes it's a little bit less often. And why is that? And is there a way to tell? Because there are different times in which there's more pressure than others. In other words, it may be an up signal, but maybe it's a weak up signal or a strong up signal. So a weak up signal would be like 55% confidence or probability, which is really just a 50-50 coin flip, if you ask me. And then there's like an 80% confidence, which means that there's 80% confidence that it will be right in the first half hour of the trading day. If a signal said up, 80% chance it will be up in that first half hour, and a 20% chance that it will not be. And I think those odds are pretty good. And so the reason I like those numbers is that I can make good decisions based off those numbers. Say, well, does it really correlate? I mean, you can put any number up there if you want. Well, my answer to that is take a look at this chart. So this is about 200 trades. And as you can see, the probability number actually does correlate to how often it is correct over time. Now, obviously, the trades in the middle of the range have many more trades than the ones on the outskirts in the 50s and the 80s. But they still correlate as it is right now, and we'll continue to track. But the thing is, this allows me and you to decide on how aggressive or not aggressive we want to be. We have 5 levels of trading when it comes to SPY tomorrow, and each one is more aggressive in terms of the ability to make more decisions. The first level is literally just doing the same thing over and over again. You have your ETF option, and you trade the same one every time at the end of the trading day. You base it off of the signal, and then you sell it at the exact same time the next morning. And quite honestly, I think that's one of the best ways to go about it because you're getting out of your own way. But as you increase in the levels, you have more autonomy to do more things, select and make decisions based on more of these numbers. Again, the probability numbers, making adjustments in your position size or maybe which ETF you want to work with or how aggressive you want to be with your ratio trade. So rather than a 3-to-1 ratio, you may go with a 5-to-1 ratio, which is much more aggressive. Or if you're trading options, how far out is your expiration? A short-term expiration is going to be more aggressive than a longer-term expiration. 7 days versus a 30-day expiration. So these are things that you can decide based off of that probability number. Now there are other numbers such as the confidence number, But honestly, the confidence number is not as strong as the probability number. And we have other, the purple max S, which is a plus or minus indicator, which is very helpful too, that can give you some confidence. But now that one specifically, it actually measures elements of the SPY, QQQ, and the IWM. So, you know, it's a broader market indicator than just the SPY indicator. But the SPY indicator is the core algorithmic indicator that we use, the ETF that we base most of our calibration off of when it comes to the others. So it's the exact same algorithm for the SPY, QQQ, and IWM. So I say it's calibrated to the SPY, but the other one, it works pretty well. And quite often we'll be able to see, say, 2 out of 3. There's another indicator, or 3 out of 3. So today, 2 out of 3 are pointed in the same direction. And I'll go with that, even if it's not SPY. Sometimes it's the QQQ and IWM, which are pointing in one direction, and the SPY isn't very strong, even maybe pointing kind of a neutral. So that's my point, is there are many ways to approach this, and there are a lot of numbers, and different traders have different preferences as to which of these numbers or which of the algorithms they like to follow. And I will always say the first one you should follow and make note of is the probability number, because that's going to give you the best indication, in my experience, as to what kind of a trade you might want to consider, how aggressive you might want to be, if at all. If you really just want to keep it simple, in all sincerity, if you're just going to stick with level 1, you're not going to worry about the probability number that much, because you're not going to change your position size or make changes in the expiration on average. You're just going to do the exact same thing every single day. I'll have some more videos on the different levels. I have a video on all of the levels. I would recommend you take a look at that if you're interested. Honestly, level 5 is pretty much the way we've often traded in the past, and I had to tamp that down because a lot of us were kind of day trading our way out, which, I mean, I said that that's what we needed to do, but now, especially that we see that in Schwab, you can easily, and then I don't know, you may have been able to do this in Ameritrade. I just never explored it or noticed it, but you can do it in Schwab where you can actually set the time in which you wish to exit your trade, and that is what I think is helping many of us get out of our own way. And so when you have that system down, you can just use the free indicator on spytomorrow.com and just go with the up or down and kind of expect that it's going to be 70-75% correct through the different markets on average. And if you look at it that way, then you can just stick with the plan and do the same thing and watch your portfolio over time grow. And if you want to see how that can work, we also have a calculator that will help you simulate your portfolio, how it might work out. Obviously, it's just a simulation, it's not a guarantee, but you can run it a number of times to see what, you know, if you, say, use a position size of 10% of your portfolio or 15% of your portfolio, and figure out how you want to approach your type of trading. This will give you a guide as to, look, there are times you're going to be doing great, and there are times it's going to just be flat, and there are times it's going down, but overall, over the long term, as long as you stick with the plan and not get in trouble the way I have in the past by figuring I know better and just saying, hey, I'm going to do something here, and then either messing up the trade, messing up or missing out on opportunities because I didn't stick with the plan, or ultimately going in and out of the market a few times, ultimately costing me money because I thought I could catch something a few more cents, catch a few more cents when I should have just stayed out and, you know, lost a couple cents rather than trying to gain a few cents and then losing even more dollars and dollars and dollars and dollars. So it can get really bad. That's the trap of day trading. And so that's why we like our overnight swing trade over here at spytomorrow.com. If you have a question like Levi did, head on over to spytomorrow.com or email me, Rosh at spytomorrow.com, and I'm happy to answer questions about overnight swing trading and, of course, spytomorrow.com. I'll see you in the next video.